John here. You invest in stocks, or you want to start. You know that Tesla is an electric car company. In this video, we're going to get to the bottom of whether you should or should not buy Tesla stock right now. Is Tesla currently overpriced, or is it a bargain? The stock's been trading at around $700 for most of 2021. If by the end of the video we've realized that $700 is cheap to own a piece of Tesla, you can buy the stock today with confidence that the price will eventually go up. This is not financial advice, for entertainment purposes only. So you might have first heard of Tesla only recently, but the company's been around since 2003. The company's unique advantage is getting this reaction from Doug DeMuro.
Oh my God!
The company's been getting a lot of media attention in recent years, mostly because their technology actually works. Of course, other car manufacturers have made their attempts at an electric car, but they haven't made Doug DeMuro go. In theory, the larger car companies with far more car making experience than Tesla should be able to create better electric cars, but they haven't yet. And in theory, the larger software companies like Microsoft and Apple with their endless pits of money should be able to get reliable self-driving technology to market faster than Tesla. But they haven't. Why is that? It could be down to the focused leadership of Tesla's CEO Elon Musk, who incidentally also gets a lot of media attention. In part because of his vast $200 billion personal wealth, Elon Musk is the main driver of getting people excited about Tesla. He can send updates out directly to his 60 million Twitter followers, and he's made countless appearances on TV shows, podcasts, YouTube videos, you name it. If Elon Musk does something, you can be sure that someone's posting about it on Reddit, which has resulted in Tesla being the most mentioned stock on Reddit's now famous Wall Street Bets forum. But sometimes Elon Musk's shenanigans get more media coverage than just a post on Wall Street Bets. He once tweeted that he's considering taking Tesla private again, causing the stock price to plummet. And then he changed his mind, tweeted that out, and the stock price spiked back up again, and he got in trouble with the SEC for supposedly manipulating Tesla's stock price. Then just a month after that, he went ahead and smoked some weed on the Joe Rogan podcast just because, well, why not? Now let's get down to some definite numbers. Tesla delivered 500,000 cars in 2020. For comparison, Volkswagen, the largest car company in the world at the moment, delivered 9 million cars in 2020. Tesla was about 1/20th the size of the largest car company in the world. But this year in 2021, at their current rate, they're delivering 1 million cars a year. Toyota and General Motors, by the way, are the next biggest after Volkswagen, so let's throw them in the mix. One way to find out if Tesla is being managed effectively and isn't wasting resources is to look at how much money the company's bringing in per employee on average. Each Tesla employee at the moment brings in about $600,000 of sales, which is better than General Motors at $500,000 in sales per employee, but worse than Toyota at $750,000. This means that Tesla's executives are running the company just fine.
I don't really have a business plan.
Tesla's currently running at a 5% net profit margin, meaning that they keep 5% of all the money that they bring in from sales after all their costs. Meanwhile, Volkswagen is achieving 7%, General Motors 9%, and Toyota 10%. So Toyota's achieving double the net profit margin that Tesla is. But to be fair, this could be because Tesla is having to reinvest more of its money from sales into increasing its production capacity, which those larger companies don't have to do.
Frankly, we're going to be in production hell. Welcome.
Volkswagen delivered 9 million cars in 2020, which was down by 15% on the amount of cars they delivered the previous year. So Volkswagen didn't need to reinvest any of their money from sales into more production capacity because they didn't have an increased demand like Tesla did. People are currently paying $409 for every $1 of net profit that Tesla makes.
You know what? Is that actually happened? Of course it happened. I think this is a...
Compare that $409 with $9 for every $1 of net profit that Toyota makes, $8 for every dollar that Volkswagen makes, and just $6 for every $1 of profit that General Motors makes. That means that people are paying 50 times more to own Tesla than they are to own those other companies. The expectation that Tesla is going to increase its current profits by 50 times at some point in the future is already priced into the stock price. For the current Tesla stock price to be reasonable, it has to be possible for Tesla to 50x its current net profit per year at some point in the future. Is it possible for Tesla to 50x its current level of profit?
We don't have a plan. No plan.
Yeah, I think so. Once Tesla's done growing at such a rapid pace and its sales start to plateau, it can stop reinvesting so much money into increasing production capacity, and it can start keeping more of that sales money as profit, increasing its profit margin from 5% to 10%. And with that 10% profit margin to justify today's stock price, it'll only need to increase its sales by 25 times rather than 50 times. If you can believe that Tesla will have the best self-driving technology in the future, which it seems like they do at the moment, then you can believe that Tesla will remain the go-to company if you want a self self-driving electric car. Volkswagen, the biggest car company in the world at the moment, is currently selling 20 times as many cars as Tesla per year. If Tesla ends up being the Volkswagen of the future with the same level of sales that Volkswagen has now, then that 25 times increase in sales that Tesla needs to justify its current stock price seems almost inevitable, providing that a tech giant like Apple, say, doesn't come out with a superior self-driving solution. But that doesn't seem very likely, considering that there are now almost 1 million Tesla cars out on the roads worldwide, collecting data and improving Tesla's self-driving tech. Meanwhile, Apple only has a few hundred cars out on the road for self-driving testing. I actually think that Tesla could go way beyond the current level of sales of Volkswagen. Volkswagen is just one of many fossil fuel car companies without a major competitive advantage. Volkswagen has to compete with every other car company that doesn't have a robust self-driving tech solution, which is basically all of the mainstream car companies. If Tesla's self-driving tech continues to be the best, I can see their sales going way beyond those of Volkswagen. So given that, and the fact that they've got Elon Musk at the helm,
He's the best thing we've had since Thomas Edison.
my fundamental analysis of Tesla is that the stock price is undervalued and that the price will increase significantly in the long term.
I think this is
As a long-term investor, you don't need to be concerned about day-to-day price fluctuations. Just buy and hold, don't try to time the price changes by dipping in and out. You'll most likely get it wrong and end up with a worse return than if you just held throughout the whole thing. To those of you watching this video a few years in the future, comment down below if I was right about Tesla increasing its delivery rate to around 10 million or more, just like Volkswagen is doing now. There are some links down in the description if you want a free stock. This is Debt to Millionaire. Subscribe.